Welcome out to another Trading Justice podcast. I'm joined with my brother Matt. This is Mark Justice from Tackle Trading. Going to discuss the cost of caution. Jay Powell decided to walk the fence and then walk another fence, and then wanted to walk a fence after that. We're going to talk about.
He might have fell on it.
No, he's going to fall on it.
He was doing cartwheels and he straddled it.
Listen, those pointy things, they can hurt if you fall. If they fall. Also going to talk about, are we in maybe a buy the rumor, sell the news event? Crypto going wild. Lots of interesting stock stories. Coach's Corner at the end, full podcast for you to break it down. But before we get going, I just want to promote our newsletter and pro membership at Tackle Trading. We have a fantastic community. We have a world-class newsletter. We have a fantastic trading picks every week, world-class education. Matt, I could go on and on, but finish my sentence for me.
Education plus application is kind of the theme of Tackle Trading. We believe in them both. We like to help our community out on both sides of the ledger, give them the list and the analysis they need to execute their systems and their philosophies and their strategies, and obviously give them robust education so they know exactly how to navigate those trades and investments and conversations we have in the market. And as you can see, you can head over to tackletrading.com, join the #1 trading education platform in the United States. And as you can see the newsletter, Traders Report. Don't sleep on those. Those are amazing reports every single week. We got amazing shows every single week in the market as well. Courses galore out there. You name it, we have it. And so how do you get there? TackleTrading.com. Sign up for a free 15-day trial and test out all the goodies that the pros absolutely love. Let's get into it.
Before we get into Jay Powell, buy the rumor, sell the news, I want to provide a technical breakdown. Now, Matt, I could break this. I am not the technician you are. I can break down a consolidation pattern for the week, though.
Yeah, it doesn't take the master technician to read the market.
Like, we traded sideways this week.
You know, I've been saying this ever since we wrote the newsletter last week. Kind of felt like we were slightly overextended and secondary patterns were going to play here. And I was expecting a consolidation, quite frankly, circa similar to what we got out of the pandemic, what we got out of the 2018 trade war #1 saga. And that's kind of the two case studies we've been anchoring against. And Mark, we got the consolidation, but my goodness, inside candles all week long. 30 minutes ago, market opened up about an hour and a half ago, and you asked me, "Hey, what's your thoughts here?" And I said, I think I could write the newsletter right this very second, because I don't think we're going to get much action later on today, especially after all the news this week, consolidating, inside candle, and that's kind of where we're at. Friday's candle had a big bullish candle, had that nice little upward movement in price. And for the next 5 days, all we've done is consolidate with the inside that Friday candle. And if you were going to tell me, I was expecting consolidation this week. I wrote about it in the newsletter last week about overextended secondary patterns, but I was not expecting 5 bars inside the Friday candle. That was a little bit unique, but here we are. Lots of news this week, lots of information to cover in the podcast, but from a technical perspective, secondary pattern is playing here. I got it as a high base, quite frankly, inside candle consolidation, waiting on a catalyst.
Yeah, no, I've went back and studied a lot of the history of these kind of broader technical situations. Consolidation isn't surprising here, and you can generally trust the move. Like, on a tight range, like if you break out, there's not a lot of false flags.
I think with all the information
in the short
coming
term,
into
right?
the market, there's so much information coming into the market right now from a trade side, from an economic side. And I'm not even talking about in people's opinions right now. I'm just talking about hardcore data coming into the market. There's a lot of it right now. And so I do think it's a technical story, because I think the only way to kind of understand the environment in general with the depth of news out there is the technical read. The technical read is the understanding of how we as a collective in the market are evaluating the entire trade war conversation, the entire tariff situation, the UK deal, the hypothetical Chinese situation, obviously the Fed this week, People's Republic Bank of China dropped rates, England drop rates. We got India and Pakistan situations happening in the market. The pricing of the market can be a little bit difficult when you're seeing all this information come in. And so, yeah, you look at the technical side of the equation, and I'll save my detailed thoughts of exactly where I see this market going for the newsletter. That's what we do in the newsletter. But I do think you got what you expected this week. I thought you expected consolidation. We got consolidation. We knew that the market's waiting on a little bit of a catalyst here. And I'm not talking about, a catalyst like, ooh, we got another rumor. Ooh, we got another rumor. Ooh, we got another thought-provoking thought that might have some impact in the market. I'm talking about something real, something like we saw out of yesterday with the UK-US trade deal, seeing how that progresses over the next week or so, seeing how China talks this weekend, how that progresses in the market. Real catalyst here. The market is absolutely crazy.
The components of the big, beautiful bill, right? Something where they can get
taxation, deregulation, the market. I'll tell you, the Trump administration really wants to get into that conversation.
Yeah,
really,
they should.
Really bad.
It's much better.
They should have started with it, but you can tell just by kind of how the president is handling some of the press conferences this week on the questions on trade and tariffs. He wants to get into deregulation. He wants to get into the trade to the taxation conversation, and I doubt the market's going to let him until we get resolution on trade.
It's not.
It's so dominant. It's so dominant.
And we're going to talk about tariffs and trade here in a little bit. But before we get into that, Matt, you and I, it has been a while on the podcast since we had a good Fed rant. It has. Like you and I, like if it was just you and me, and the only listener was our mother, right? You and I would talk central banks almost every week, right? Because we theorize with this, but
we enjoy central bank conversation.
But for a while now, there hasn't really been a relevant conversation that was really worthy of an extended conversation, right? I think you and I both believe there is now, and it centers around Jay Powell and his hesitancy to commit to anything. We titled this podcast "The Cost of Caution," referring to how cautious that Jay Powell is being right now in the current dynamics. And
he did mention uncertainty 18 times this Wednesday.
18 times. In fact, Matt, I think he's used that word
while trying to also equally paint the U.S. economy as strong as well as inflation is fine.
Inflation is fine, but everything's uncertain, right?
Yeah. 18 uncertainties, but you know what? Nothing to see here, guys. We're good.
Yeah, no, yeah. And
I thought that was funny.
And what I would like to do for a few minutes is recap what was said on Wednesday. Obviously, the Fed didn't do anything. They didn't lower rates. They didn't make any real massive changes to their statement other than saying the risk of, both sides of their mandate have risen. But when Powell got into his press conference, there was a clear message of nothingness, right? Nothingness. And Powell has a history of this. And I want to discuss that history and how it has backfired on Powell in the past and how it may backfire on him coming up. But just recap your thoughts.
Wait a second.
As you were.
Lack of strong opinions and foresight in action leads to erratic results.
And has led to some pretty nasty results, to be honest, where the market finally said, no, we've had enough.
My number one thing is, how do you not have an opinion on the data that you currently have? That is my number one thing. I do not understand. And again, I don't want to.
Well, but before we get into that, because listen, you and I can go on a Fed rant. We have to stay structured. Or we will go off for 47 minutes.
You lead it.
Just complaining. Recap your impression when I called you about 12 minutes after the Fed meeting. You're like, I just woke up from a nap. Why were you so sleepy in the Fed meeting?
Because they were putting me to sleep. That's why. There wasn't anything new. There wasn't anything.
Complain, brother, because you complained to me about the reporters. You complained to me about.
I felt like the first three questions were we were watching a White House press briefing. I didn't feel like they were trying to even figure out that. I don't think they were trying to actually push Powell on trying to figure out anything that is actually happening out there. I thought it was a pathetic display of reporting, quite frankly. But It was beyond that. Powell didn't really have anything to say. He didn't really have anything to update. He talked a lot about in maintaining the monetary policy at 4.25 to 4.5. He talked about a lot about equilibrium between the dual mandate of maximizing labor while also controlling prices, not allowing inflation to get too out of whack. And so he looks at these two. The mandate is equal. And when he does that, he's trying to get the data, and he wants to see the data move before he commits to one part of the mandate or the other. And so he looks at labor and he looks at the economy and he says, okay, we got a little bit of concern on the economy, we got a little bit of concern on labor, but we haven't seen the sizable impact on the economy yet. And on the inflationary side of the equation, he's like, hey, we got a long-term projection that looks pretty good, but we got a little bit of short-term concern due to tariffs and the initial price shock that we're going to see through tariffs. And when, if we see, shelves not getting stocked out there. And so he's looking at the environment on inflation. He's saying, oh, all right, I kind of feel like I have a good path long-term to get down to that 2%, but I got some concern in the short term on the inflationary side of the equation. In my estimation, if it wasn't for the 21-22 saga of transitory, Powell would be favoring the labor market right now. Powell would be favoring the economy
as other
right
Fed
now.
speakers are.
Because I don't think it's hard to look at the totality of the environment and say you should have a little bit more concern on the economy right now than you do on inflation. And I think what's happening here is the problem with transitory in 21 and 22 is just Powell doesn't dare, quite frankly, doesn't dare have the courage of his conviction to have an opinion on where the data is going. And so by the time he acts on the data is already staring us at the face and the consumer is already concerned and they're already pulling back. And so when you look at the totality of the data right now, yes, should we see a little bit of inflationary impact due to the tariffs and the trade war? Of course, we're going to see a little bit of an inflationary impact. How large, how sustainable, how long term, I don't have that massive of concerns. I don't feel like this is a repeat of 21 and 22. We don't have the same monetary supply today. And you might say, well, Matt, we have the same budget. We still have that post-pandemic budget. We're still going to be doing that. That gets a lot of print, but that doesn't have a lot of impact on the inflationary impact today. We had massive surpluses in 2020 and 2021. We had massive increases in the supply rate of the M2 rate, and you had stimulus on top of that. And that's after 10 years of easy monetary policy, which means there was so much money in the US already, and then you add the pandemic and the increase in supply and the lack, and then the supply chain crisis, and you just had this explosion of inflationary pressure that I felt was going to have a massive impact. And Powell back then anchored against well, we feel it's transitory because the supply chain is going to heal post-pandemic. And the mistake was not understanding how countries and consumers and businesses were going to respond to the supply chain post-pandemic. Nations were going to go more isolationist. The supply chain was going to take longer to heal. China was not even online at the time, Mark. We might be talking about a hypothetical trade embargo on China today, but they were completely shut down 3-4 years ago, and they were shut down for 3 to 4 years. And so it's just a different environment, but he doesn't, because of that experience, it doesn't feel like Powell has that courage to come out there and just give an opinion on where the data is going. That is my problem with what Powell, it's not necessarily what he's doing. It's just that he won't have an opinion on where the data is going, and where the data is going on the consumer side of the equation is concern and consumers pulling back. Where the data is going on small businesses is concern and small businesses pulling back. Where the data is going on Wall Street is concern and Wall Street's pulling back. Now, does it lead to contraction economically where we get 2 consecutive quarters of negative GDP? Probably not in the second quarter, quite frankly. We saw GDP increase. But we did have that first negative print. We are seeing early signs of weakness in the labor market, and the consumer is very concerning out there right now. And so you add up all of that, and it's like, how do you not have opinion where that's going?
And listen, in the criticism you just laid, in the ones that I will lay here in a minute, that is basically my chief criticism of Powell. And as a, Paul Tudor Jones this week had a very well published interview on CNBC, and he's like, listen, he says, I believe for reasons of trade and the Fed, unwillingness to act, that we're going to revisit the market low.
I think you can throw Ken Griffin into that. I think you can throw Jamie Dimon into that. I think you can throw Larry Fink into that. They're all screaming.
Yeah, I don't
think it's hard to have an opinion on the data right now.
I don't really understand why it is. What the problem is saying, yes, there are some concerns and what we would favor if they occurred. Governor Waller has been very clear about this. In a scenario where inflation is running hotter than expected, if the labor market cracks, he has been very vocal. He says, no, I would be support of rate cuts to stimulate the economy. He's been very clear on the action that he would do. With Powell leading the Fed, we don't have that clarity. And markets do not like uncertainty. They do not like a lack of clarity. It doesn't give them any confidence. And Matt, when you look at the stats, and let me finish this.
Finish it up.
And the cost of caution, right? If you wait till the dam breaks, if you wait till the dam breaks, right, it's going to be the same issue that you had with,
it turns into a confidence issue, Mark. And when it turns into a confidence issue, it's a behavioral situation. And you just can't shift behavior simply because you have a conversation over one time. That takes a lot of time to work itself out. And so I think the mistake is relying on too much data and they're waiting on the data to break and then they will act. My second thought here on the failure to have an opinion on where the data is going, I do think that's a mistake. But the second problem I have here on the painting of the equilibrium of the mandate as equal right now, meaning again, they see the risk to the inflationary side of the equation the same as the risk to the labor side of the equation and thus the economy. Can I just ask you a simple question? When was the last time you heard the Fed embrace a rate hike conversation?
No rate hike, 2022.
Okay, so it's been a few years, right?
It's been a few years.
If there was true equilibrium between the concern on the mandate, inflation versus labor, wouldn't there be some degree of conversation on rate hikes?
Yeah, no, the only conversation...
If the concern of the inflation was really real.
There is zero conversation out of Fed members about hikes. The only conversation is the lack of cuts. Yeah,
it doesn't make sense to me that, again, equilibrium. I need to see more data. I need to see more data. But the entire conversation's on when they're going to start the path of cutting, which means the long-term projections on inflation, they don't necessarily buy, which means to me, this is just Powell lacking courage to actually say the word transitory.
And this is the problem we have coming into this little stretch. There's lots of problems.
Thing about it is, Mark, he probably would be right on the transitory pressure of inflation.
This time around,
he'd probably be right, but he's going to make the opposite mistake because he's scared to use the word.
And there's enough anecdotal evidence. You go to Challenger and Gray and the job cut announcements over the last 6 months are at the highest level, not counting COVID, which obviously had a big spike since financial crisis, right? By a sizable degree. I mean, we could go on. I think other Fed members take into account the data they're seeing, like Waller and so forth.
Honestly, I think this conversation shifts. I think Powell knows it, and I think it starts to shift in June. I know they didn't lay out any degree of rate cut expectations for June, but Mark, simple reality is this. We're the only one in the world of the major countries out there that are not embracing rate cuts in front of economic damage.
Yeah.
So when you live in your bubble called the United States and you put on the blinders and you don't see what the rest of the world is doing, the rest of the world looking at the exact same environment, what does England say this week? We're cutting. That's what England said this week.
5-2-2 vote.
Okay. What did China do
I love how the England votes, by the way. I like just like a 5-2-2.
Oh yeah, they'll have disagreements far more than we will. The British will have disagreements with each other far more than Americans will. But what did China do this week?
They cut.
Okay, what did Canada do recently?
They cut.
What are we going to see out of Europe?
Oh, you're going to see a couple cuts.
Okay, so the rest of the world is embracing cuts. Japan's a little bit different, but the rest of the world is embracing cuts.
But they didn't hike either. Like it was widely thought that they would hike, and they did not.
Because the rest of the banks have an opinion on where the data is going. That's my point, is it's not difficult to see where this data is going. And I don't think it's difficult to weigh the economic situation slightly higher than the inflationary situation. And I think that's the truth of the situation. You heard it out of Waller. You heard it out of other central bankers. What you didn't hear it out of it is Jay Powell, because again, I'm just going to end on this because I know we got to pivot here, Mark. But at the end of the day, I just think there's a healthy dose of fear to embrace whether or not we're having a transitory situation due to price shocks on tariffs. Yeah, and that'll be interesting to see where it goes. I think for me, I got a little bit more concern on the consumer side and the economic side in the short term. And again, I'm not talking about embracing cuts to the point where you stimulate the market. I'm talking about 2 cuts throughout the next 8 months as you start to reduce the restriction of interest.
And once again,
we're still in restricted territory on interest rates of 4.25, 75 basis points.
There is so much self-fulfilling prophecy going on, and this is one of the more cautious things I have in the market right now is the self-fulfilling prophecy. If you cannot telegraph to businesses what the environment is going to be, that creates uncertainty, and those challenger and gray job cuts.
And you already have that with tariffs, right?
And you already have
that right now with tariffs, and then you add on another dose of uncertainty. And again, I understand what Powell's doing, Mark, but to have the central bank president, one of the most powerful people in the universe, up there saying, "I don't know," nonstop, why is he paid to do the damn job then?
It's not
like
bullish.
I'm serious, like. You can't have any opinion on where this thing is going. Just, we're waiting on data. We're waiting on data. We're waiting on data. The cost of caution is an economic recession. The cost of caution is consumers getting more concerned. The cost of caution is small businesses pulling back even more. The cost of caution is waiting too long on taking action, the same way he waited too long on taking action on raising rates in 21, the same way he waited too long on doing something in 2018 as well. If you recall, Mark, he was forced in 2018 and he was forced in 2020. He was forced in 2018 when the plunge protection team got called on December 24th of 2018. And then he was forced to act in 2020 when the pandemic shut down the entire global economic system. That are 2 unprecedented situations where he was forced to act. Outside of that, the one time that he did decide to act in front of anything, he got blasted. That was the 2018 hikes.
Yeah, I mean, when you look at .com, when you look at financial crisis, when you look at 2022, central banks, they get a lot of things right, but when they get it wrong, when they're behind the curve.
I think Powell has had a very difficult job. I think he's had an extremely difficult job. I still think he's worthy of criticism because he's one of the most powerful people in the world, and they should be held to an extremely high standard.
If you cannot criticize your leaders, even the ones you like or dislike, then what's the point?
What's the point of democracy on it?
What's the point? What's the point? All right.
All right, let's move on.
Listen, fascinating week on the trade war front. I mean, endless headlines. We got our first deal done. A tentative agreement. A lot of ink. The thing will be negotiated probably for years with the UK. But hey, got something on paper, at least a negotiation to negotiate, agreement to agree. We've had China and the United States announce that they will talk this over the weekend. We've had, I have thought that Scott Bessent, since he took the lead, the administration has done a wonderful job of telegraphing to the market that we care about you.
Did you see the president today say Scott B is going to handle it?
I just want
Scotty B. I just want Scotty B.
I want to just call him Scotty B.
Come out and say Scotty B has this. Scotty B has this.
When President Trump called it,
Scotty B.
Because President Trump tweeted like, "Hey, I think about," I'm going to paraphrase. I think 80% tariffs on China, but I'll leave it to Scott B. I think we can all now just call him Scotty B.
Scotty B.
Like Scotty B. I thought he's done a masterful job.
Scotty B puts him on level with Yellen.
Because absolutely. I've been saying that a lot lately, that I think he is a player. He is someone that will be market
I like Scotty B.
I like Scotty B a lot from a market perspective. Like
He's dry, and I love it.
I like
I love it.
I have went from I don't like this guy to really respecting him as and his ability. But there's been a lot of news flow, right? There's been a lot of news flow, a lot of headlines, and we've had this tremendous rally over the last couple of weeks.
Mm-hmm.
And you and I were chatting earlier in the week, just in one of our many conversations, and I can't remember who said it first. You might have said, I can't remember, but one of us said, isn't this kind of a buy the rumor, sell the news with the news flow coming out? And the other one, whoever said it first, the other was like, it kind of is, right? Like, why is that thought creeping in our head, Matt?
Well, buy the rumor, sell the news is a very old cliche in the market. It happens when the market is anticipating information coming into the market, prices in that positive information, and then the news comes out, and it's very similar to any other expectation that's set in the market. It's when an expectation is set and the market prices that expectation as the barometer of how we're going to judge things. Is it positive? Is it negative? Right? Consumers judge things based on the net zero, right? If it makes money, it's positive. If it loses money, it's negative. Investors, traders, economists, they know it's a lot more detailed than that. And so the expectation is set, and it gets set in earnings, right? You have an expectation of EPS, you have an expectation of revenue, and then if you beat the EPS, you beat the revenue, you're going to get a response. If you miss the EPS, you miss the revenue, you're going to get an opposite response. You increase guidance, you decrease guidance, you're going to get an impact there. That's a little bit of a buy the rumor, sell the news. You're setting an expectation, market's going to price in kind of based on the real information that comes in. Economic reports, for example, you have an economic report comes out, say it's labor is expected to come in at 4.1. That's the expectation. Well, all of a sudden, let's say you get the real news comes out and it comes in at 3.9. That's very positive. Well, now you got to reprice in the positive news. Well, if it's negative, you got to reprice in that negative news. So you see these types of situations happen all the time. They happen in economics, they happen in earnings, they happen in general themes that develop in the marketplace. So over the course of the last, couple weeks, 2-3 weeks in the market's had a really good response. And that really good response,
Scotty B's been out there slinging info,
but it hasn't been based on anything real.
No,
it's been based on the hypothetical,
the rumor.
Exactly, the hypothetical scenario that we will see things happen in the future. So an expectation gets set by the market, right?
There's been this general belief that there's just this broad de-escalation going on, right?
Yes, and despite the negative headlines that come into the market does not price those in, because in general they have a positive view of where this trade war and where this tariff conversation is going. And we started seeing some of that this week. So over the last 2 to 3 weeks, market's been held up. Market's held up against negative news. Market goes up against negative news. Market gets a positive trade headline. Market goes up 2%. Market gets a negative trade headline. Market dojis, right? That's pricing in the event. Well, the event hasn't occurred yet. And so as you start to see the events occur, all of a sudden you have a base you can compare it against. You know where the market's heading. And so if you now start to get real news that comes out that does not exceed where the expectation is by the market, in the market being held up, you'll get an opposite impact. Market will come down because the real news does not either match or exceed what the expectation of the market was in going up over the last couple of weeks or being held up over the last week. And so what we're seeing this week happen, and there's been some famous buy the rumor, sell the news events.
And even like little thing, Apple iPhones, Tesla inclusion into the S&P 500, Fed decisions, right? I mean, markets increasingly, trade on expectation, right? Not the actual things. And it has nothing to do with the thing not being true, right?
No.
Like Tesla got included in the S&P 500.
It has nothing to do with that. It has everything to do with the market anticipating something, pricing that anticipation in, and then the realization of reality sets in when they see the actual news, and it's not as good as the expectations, and you'll have to reprice that. And so it's a very well-known event. And what we're seeing a little bit this week, right? You take the UK trade deal, right? We got the UK trade deal yesterday. Okay?
Before you recap the things, would you say in summary, the overall headlines were generally positive in summary from just a trade war perspective, not a J Powell sitting on the fence?
I took all trade conversation positively.
It's hard not to, right? Like cumulatively.
How do you take it as a net negative? Like buy the rumor, sell the news isn't how I personally feel about the news. Like I might like
it's
the news,
not about the, and I think that's
it might not be the end all be all.
It's not whether the news is true or not. On the thing, it's just that
it's just not as good as you expected. It's like, okay, you have an EPS expectation of 30 cents and it comes in at 33 cents. You're not going to have a negative take
it's not on a
3-cent beat. But if the average market beat is 9% and you come in at say 5%, that's not as good as you would expect. It's all comparison. The market has to find something to compare it to. It's not zero. The market doesn't work at zero. And so coming back to the UK trade deal, no, Mark, I didn't take the trade deals this week as negative. How could you? I think you take the information as what it is and you try to understand where the conversation's going. But the UK US trade deal, I don't know how you paint that as a negative. That that's the first major trade deal for the UK since they left the EU. The only other trade deal they've ever done that is major is the one with the EU when they left Brexit. This is not a small deal for the English, and it's certainly not a small deal for the United States. They're our 5th largest trading partner, but they're not our 1st largest trading partner. They're not our 2nd or our 3rd or our 4th. They're our 5th. And so when you look at the UK trade deal, number one, I've seen a lot of criticism that there wasn't a lot of changes on the tariff side. We're keeping the 10% tariff on UK. UK's lowering their effective tariff on the United States. And so I'm seeing a lot of chatter on that being a net negative. I don't take it that. When you look at the UK trade deal, the US got expanded access to energy, industrial, and agricultural access into the UK. They're opening up their market to our agricultural products, to our aluminum. They're opening up to core resources that we absolutely need in America, and we certainly need to have those farmers be able to export as well. So I felt like these trade deals, we get so caught up in the overall tariff impact because that's where the conversation has been, that we don't look at some of the side impacts here. And I think that's the positive out of the UK trade deal is those side impacts in getting our beef into the UK, for example, getting the access to the aluminum, getting our cars getting in there at a much faster clip. And so when you look at the totality of the trade deal, there wasn't a lot of changes on the tariff side of the equation. UK lowers theirs. We keep our effective tariff at 10%. But in totality, I thought it was a really good deal for the United States. When you remove the trader's hat and you just look at the deal through the lens of is
put
this
on your
a
macro
good deal
nerd
for America in general? And I think you have to say yes. I will say this: the one thing that really stood out to me in the UK deal is we didn't budge on the 10% tariff. And that tells me that Trump, the administration, is basically saying to the rest of the world at this point, there is, regardless of where these trade negotiations go, there is going to be a cost to get access to the American consumer, who is by far the biggest consumer in the world, who is by far the strongest consumer in the world. And so there is going to be that. If we're going to put a 10% tariff on UK goods coming into the United States, Mark, we have a surplus with UK. We have a trade surplus with UK. We have good trade partners with UK. And if we're going to levy a 10% tariff, that's going to be across the board to the rest of the world, in my opinion. And so I think we're starting to get the baselines of where these trade deals are going. Obviously, China's going to come down. We'll see how they handle the weekend, big negotiations.
And who's
China
it up to?
Switzerland.
At what the tariff rate is on China? Who's it up to?
It's up to Scotty B, baby.
It's up to Scotty B.
Scotty B's got this. Like in Scotty B, we trust. Let's see.
I just wanted to wear a gold chain. Just start wearing a gold chain. He would be the most popular.
He will be the number one treasury
lose the tie and break out the gold chain.
No, what I love about Scotty B is his dry. I like his dry wit. I just do. I get down with it. I get down with it. But anyways, so on getting back to buy the rumor, sell the news. It is a very simple thing to understand, because if you understand how earnings and economic reports get impacted, you have expectations. If those expectations are not met, you will get a repricing event. It's really as simple as that. And the expectations for the market right now are trade deals. That's the
Trade
expectation
deals,
for the market.
de-escalation.
Not talk, trade deals and de-escalation.
If I were to sum it up in my hick language, it would be like, as long as, the expectations are things aren't going to get crazy again.
Oh, and by the way, buy the rumor, sell the news. It can have the opposite impact too, Mark.
Yeah, like if you buy the rumor and the news isn't true,
better. No.
Oh, you're saying
no.
Why you're such an optimist?
No. It's not an optimist or a pessimist. It's understanding how it works. Yeah. That's the importance. It's not my job to have an opinion. It's my job to understand how it works so I can respond. And so how buy the rumor, sell the news. If the expectation is set, the market prices in that expectation. And then if the real news comes in above expectation, markets will reprice
For example,
it higher.
If China was to drop to 25% tariff, that would be far lower than anyone is anticipating.
If Trump came out over the weekend and said China's at 25%, we're at 6,000 in the ES.
Yeah, market cap's up 2.5%.
It works the same way. And so when people hear buy the rumor, sell the news, they always think it's a negative impact. It's not. It's an understanding of you're in that type of environment where the market's pricing in rumors, and we're now starting to get the real information that's going to have a sizable impact. And so you had expectations of consolidation this week based on the totality of our conversation. I don't think you have expectations of consolidation as we remove this week. I think you start to expect a little bit of movement.
Yeah, one way or another. I would agree with that.
K-trade scenario, yeah.
No, but understand because a lot of traders would say, like, why didn't we do? There were so many headlines this week. I'm like, because the administration for 2.5 weeks have been telegraphing.
We're pricing a lot of those headlines.
And they've been telegraphing. Scotty B been out there. It's been more Scotty B, less Letwick.
Thank goodness. Well,
no,
Howard and Navarro, give me Scotty B all day long. Give me Scotty.
That's what the market says. And so they telegraphed this was coming. And so when the actual news is delivered, it's like, oh yeah, you guys basically told us that this was coming.
You told us it happened. Now let's move on. So yeah, but we are firmly entrenched in that type of environment where assume there was an economic or a major earnings report next week. You have an expectation, market prices in that expectation, then it will go based on the expectation next week. That's why I feel like
all right,
this conversation has to shift to more trade deals and less hype. Like
I want to talk about Big Beautiful Bill. Like Big Beautiful Bill, Scotty B. You know how many rhymes we can just create with that? Like
Scotty B is a wonderful rap name.
So listen, I can feel a Big Beautiful Bill song coming on. All right, going to put you on the spot. Do we get positive news coming out of Switzerland with China and Scotty B this weekend?
Again, define positive. I think, okay. Do we see a reduction of tariffs?
Yeah. I mean, below 60%. I think you see a reduction.
Below 60?
Sometime in the next week. Okay, let me rephrase this. I'm going to give you when we see, because we are going to see tariff reduction on tariffs in China. That's priced in.
The initial reduction will be above 50%.
So above 50%. Mm-hmm. All right. That's what I wanted to know.
Trump was hinting at 80%. Like that's what he was hinting at.
I think he was saying that just so that he wanted to deliver a surprise when it's 60 or 50 or whatever. So
maybe
you got a game theory with Trump.
You do. But I don't know. I think it would be north of 50. I think we certainly do start to see an embrace of lowering tariffs, but I unless China gives something, it ain't going to happen this weekend. Like I don't think the market's necessarily going to move.
And if you can't, like if the only real negative I see if China announces they're walking away, like if they say nope, we engage, we're walking away from negotiations. I can't
imagine that happening.
No, but you just paint the scenarios.
Yeah. I mean, there are scenarios where things happen and people walk away, but I don't know. There's too much to be
I
gained
don't
by
think it's
both of
going to
these
happen, but you just
countries.
anticipating the headlines. All right. Next, going to do our next segment, going global. Like this was a really interesting week. While the S&P, while broad markets didn't do anything, crypto's like, listen, you guys can consolidate within a range all you want. Hang out there and have we're gonna party, and we saw this in strong breakouts. We've been talking about Ethereum. We've been talking about Bitcoin for a while now, right? Just from a technical perspective, you don't have to put on the big fundamental hat. We saw slowing momentum consolidation builds in Ethereum that caught our attention. We've been talking about it in our pro community for the last couple of weeks. We saw, basically, Bitcoin has telegraphed its momentum from a technical perspective for about 3 weeks. These have been very much technical stories. It's why technical analysis is awesome, right? You don't have to believe Bitcoin. Just technically, these charts pointed towards upward momentum, stability at a minimum. It's been certainly playing out that way, hasn't it?
Yeah, and both Bitcoin and Ethereum both took off this week, earlier this week, and the reality is when you look at both of these two, I think a lot of us favored Ethereum, but we had a very similar opinion on both. It just depends on do you like chasing momentum at the top? Do you like reversal situations at the low point? I personally like reversal situations at the low point a little bit more. The Ethereum move was absolutely amazing to see here this week. We talked about it through a ton at Tackle in the last couple weeks. And it was just, honestly, it was just one of those situations where one of our members brought it up one day a couple weeks ago, and we've been breaking it down, and it had slowing momentum, deeper retracement. Then it came into that 50-period moving average, broke through that 50-period moving average, and gapped up on ETHA. Futures obviously see a little bit more of the smooth pricing there, but you obviously see this as a confirmation on a reversal. And when you are looking at it technically now on Ethereum, you would probably say, let me see that secondary setup. Now you don't want to
needs to
chase.
simmer.
Well, but that's
down.
also why you want to become a pro of tap and trade and have these conversations before they move, so you can get action when they do. But in terms of that secondary setup, I do think Ethereum on any pullback, any high base, like a high base at 2,500 would look really, really, really good. A pullback down to 2K would look really, really, really good. And so it's got initial momentum here. I like it from a swing to position at this point, and which means any secondary pattern will play on Ethereum. On Bitcoin, I don't think you have that same type of scenario on Bitcoin, quite frankly, because when you are looking at Bitcoin, you got this as a momentum high base breakout, and you have overhead right about $6,000 above the price right now at 110,000. And so you're really looking at this through the trader's lens. Ethereum on the reversal, you're looking at it through the swing to position. On Bitcoin, I think you are looking at it at the swing. You could look at it through a position lens as well. I just think reversal analysis is better for that than momentum analysis is. But either one, both of them got lift off this week. Ethereum, Bitcoin, both were fantastic, and I'm very happy that a lot of our community caught this.
Yeah, we've been on this one. We've made a few bucks on this one, and I think
all the
there's
while I've been saying hesitation on gold.
Yeah, and I think I think we're going to get a setup or two to play still here, right? In crypto, it's just being patient for it. But I got to give you a thing. You basically called the dollar sell off and said, listen, the dollar's done selling off for a while. You've been on this for several weeks, right? You've been like, it's just
a couple
done.
Weeks.
Yeah, a few weeks.
Yep.
And your direct analysis on that is like, this is likely to cause gold to hesitate here, right? And that's exactly how this has played out.
Well, I was looking at it for two things. Number one, hesitation on gold analysis, and I was looking to short the euro dollar, which was a fantastic trade yesterday, by the way. I just got this as a slowing momentum reversal type situation. And honestly, how I've been describing it is basically I feel like the Sell America trade has went a little too far. I'm putting on my red, white, and blue hat. I'm giddy up and going with all the patriotism right now. I just felt like the Sell America trade went a little too far in the short term, and we were going to get a counter impact to that. And obviously we saw that break back up above, but that had nothing to do, honestly, with the United States, in my estimation. I think it had everything to do with how we see the central banks. I mean, think about it. And this was kind of cooked into my analysis coming into last week, that though it was widely expected that China and the UK were going to lower rates this week, widely expected. And it was expected that the United States was going to hold pat. Well, what did we see? China, UK lower rates, United States stay pat, and then the United States was very open-ended on the path of policy. And all of a sudden, when you now see a scenario where the rest of the world is embracing rate cuts in front of economic damage and the United States is not, when the United States typically leads that, well, when you lower rates to increase the supply of money, your currency goes down in value, which will have a net impact on dollars going back up. And so it was a little bit twofold. Number one, expectations on what the central banks were going to do this week. And then number two, just having an overall philosophy that I felt like the Sell America trade went a little too far in the short term. I felt like the slowing momentum, we were going to see a little bit of pop here. We got that pop. And now the question is what happens on the dollar next? I mean, you're talking about most likely a scenario, if you close above that 100 barrier, that you're going to go up and test a little bit. I don't see this as the beginning point of a, amazing uptrend. Like that's not what this is. I'm just looking at this through the short-term reversal, maybe get back up into that 102 level. And so on the analysis on gold, I just felt like that was going to have a little bit of an impact on gold. And if it wasn't for the Pakistani Indian situation earlier this week, I kind of felt like I would have got my 290 handle on gold.
Yeah, but we might have like a nuclear power war, and like I mean, those headlines are serious. Like,
of course they are, but it doesn't change the fact that we have a double top here on gold at this point, and we have shifting volatility on gold.
Do you think as soon as those headlines subside, then we kind of like revisit that 300 290 level maybe?
I don't think 300. I think 290. I don't like you visit 300. Congratulations. I have no opinion at 300. I have an opinion at 290. And so could we visit those lows? Absolutely, we could visit those lows, Mark. All it would take is two alleviation events, out of the trade war, which we're going to get information over the weekend, alleviation out of the Indian Pakistani situation. So regardless of that situation, I think you're looking at a topping action on gold in the short term. I don't have it as a reversal, Mark. That's not what I have this as. I have it as shifting volatility at the top end, going through general consolidation, and the ultimate support level, in my opinion, is 290.
Yeah, like listen, when asset classes make huge, massive runs, a healthy dose of consolidation dynamics is very healthy.
And if I'm wrong on the pullback, I'm going to tell you right now, I'll love it if it consolidates a lot more time, though. It would have to consolidate a lot more.
Yeah, absolutely. Yeah. Let's fire through in our next segment some stocks in the news. Interesting stock news week. I want to start with Google. In the middle of the week, there was news out that an Apple executive had hinted that they were going to move away from Chrome. That sent Google down, I think, 10% on the day. You can see the big red candle on the day. It was big move. Google came out, said some wonderful things overnight. But what was your take on the news?
A little shock at first, a little shocking off first, a little bit of, wait a second, what does this actually mean secondarily? First and foremost, Apple.
You know what my first thought was?
Yeah, what was it?
I'm going to call Matt. I don't want to have to think about it.
Google pays Apple $20 billion for search to be a prior on shirts. This is not a small thing out of Apple. And by the way, a rare news item on two stocks where the market hated it, but for both stocks, Google went down, Apple went down. Both those stocks went down on this news. It's not like the market's like, ooh, Google's loss is Apple's win. Like that's not how the market saw this at all. Saw a concern for both, but obviously had a little bit more concern for Google. Search is a big deal. Google controls search, but search is not the deal for Google today as it was 5 years ago, Mark. Google has done Google's from a cloud-based system, YouTube, for example, and whatnot. That's $1 trillion enterprise in and of itself. And so search is important. I'm not trying to say search is not important for Google. It's just not as important as it once was. Also, Google came out the very next day and said, we're not seeing search get impacted on our side of the equation. We're actually seeing search go up. And so
They
I
didn't
think,
come out the next day. They issued a statement that night.
yeah,
They're
it
like,
was pretty
I
quick.
love it when companies do that.
I
Love it
felt
when
this was Apple trying to get in front of the EU antitrust lawsuit against Google, and I'm not sure it's going to have legs, so it's going to be an ongoing situation.
Yeah. Next news story: Nvidia could insert semiconductors as a whole, but one of the many de-escalatory type actions was the removal. And once again, we're just such a busy news stretch in markets these days.
There's been so much news this week,
But
so much.
it was dropped, and Nvidia actually breaking out of the short-term resistance where the S&P wasn't, and a lot of it had to do with the news that the Trump administration was rolling back a Biden administration rule that would limit Nvidia sales. And Matt, you took this as not only positive for semiconductors, Nvidia specifically, but another sign of de-escalation, didn't you?
I did see this as a sign of de-escalation. The Trump administration is looking to eliminate one of the Biden era chip curbs, which stopped Nvidia specifically from selling chips to China. Now they're not just going to eliminate it; they are going to replace it. But the thought is that they're going to replace it with softer language on the regulatory side of the equation. And so I'll stop short of saying it's positive or negative yet. Let's see what the Trump administration comes out there with the rule. But it does seem like Jensen has got to the Trump administration.
Man, that guy has been working the politics on both sides of the
which he rarely
Ocean.
does.
He's been working Beijing
does.
And Washington D.C.
Which again, I want to be clear, that is not Nvidia. Nvidia stays out of the political fray a lot, and so it was rare in January when Biden announced this, just a couple weeks before Trump took over, that they were going to have these chip curbs. And it's understandable to have some chip curbs to China. We're in an arms race with China from an AI perspective. And so what the Trump administration is saying here is that just went a little too far. And that's what NVIDIA said literally the day after. Like, we understand what you're trying to do, but you are hurting our ability to compete on the AI front. And that was NVIDIA's argument, is we're in an arms race with China, and you think that just by selling this, it's going to help China. It's hurting us. It's hurting our ability to develop. And so Jensen came out pretty strong on that, and the Trump administration is making that modification. Once again, I do take it as a positive on the AI side of the equation. Is it a major catalyst for AI? I don't think that as of right now. I think the earnings reports this quarter.
Well, it's much like a lot of the things with the trade war. I mean, the trade war, dialing back, de-escalating isn't a catalyst to send the S&P to new highs, right? It's an alleviation event, right?
It's an alleviation event.
You need some juice,
stability,
right?
Consistency.
Now, Nvidia, in their earnings coming up, they can provide the juice, right?
Well, I'll tell you right now, if they're able to sell H100 chips into China, that's going to help that revenue stream.
Yeah, let's pop over to AMD while we're here, because they had earnings as well. I know this started to pop up on some traders' list as far as potential trades. What was your take? I mean, obviously a beneficiary of the same type of news that benefits Nvidia. Semiconductors have firmed up a little bit more than the market as a general rule.
Well, that's because they got beat up a little bit more than the general market too.
And so, a little bit of Ethereum got beat up more, a little bit more catch up, if things, turn around. What's your take on AMD's earnings this week?
I thought the raw numbers were fine. Like, right in line. EPS was in line. Revenue was actually up year over year by about 36%. That was actually a really good revenue handle, but EPS was up a paltry like 3%, 3% against expectation. 96 against 93 cents is what they came in. They also increased guidance by 2%. And so kind of mixed on the raw numbers, increasing guidance. I think what's interesting about AMD is just the technical conversation post earnings. Not a lot of volatility post earnings, quite frankly.
Oh my goodness gracious.
Not a lot at all.
Just I take that as a good sign, to be honest.
Yeah, stabilization. I don't know how you take it as a negative sign. Stabilization across the board. And I think this 105 level is kind of the level you're anchoring against to kind of see what happens next. And so it's going through a little bit of a reversal situation. It has not bought a lot of time in reversal, which means you have a lot of overhead. And that's the one concern you have on the directional side of the equation is you got a pretty good trend line break here. You got a pretty decent little reversal playing out here as well. And you finally got some positive news coming out on Nvidia with the revenue beat and the obviously the increase in guidance. But what you just said on Nvidia would help AMD as well. And so you got some positive headwinds here. We'll see if they can break back up. The only flaw in the analysis on AMD, and I think it is a big flaw, the overhead is significant here.
You have to be a heavy hitter to make our stocks in the news this week because there was so much news. Palantir had earnings. You had to be a heavy hitter. There were no small companies. Matt, I just got to give you credit. You nailed the earnings response in our pro community on a freaking insanely ridiculously degree of difficulty. Like, you're not going to pat yourself in the
difficult.
back. Yeah, oh, shut up. You're such a freaking nerd.
I didn't think it was difficult. Okay. That was 2 + 2 to me.
Shut up.
It was. I'm sorry. Palantir, where's it going to go on
I'm going to start calling you Dustin Hoffman from Rain Man because, like,
I'll take that as a compliment, by the way.
Yeah, you would. Right.
Did you see Dustin Hoffman play blackjack? Yeah, I'd take it as a compliment.
Okay, tidy whiteys. Breakdown because it was a fantastic call on the degree of precision. You basically said in our pro community, expect the numbers to be decent, expect about a 10% sell-off on the earnings reaction regardless of the numbers, and then expect perhaps stabilization after that. You literally Rain Manned this week in our pro community. Explain your logic.
My logic was Palantir overextended going into.
Explain our logic 2 + 2.
2 + 2. Palantir overextended going into the print will put the edge to the downside coming into the report, unless it is absolutely mind-boggling, just knock it out of the park, grand slam, and that's not what was expected.
Well, most of the time, things aren't that, right?
That was not expected out of Palantir. Market maker move had a 15-point market maker move. Options pricing was pricing in a 15-point move as well. And that kind of confirmed the market maker move for me. And with my anticipation that the market was going to go down on the earnings print, regardless of what Palantir said, that put the price target going into 110 with the 125 handle going into the earnings print. It happened to work out that Palantir gapped down to 110 on the dime on the overnight action, but I was really just looking at kind of expectations based on technical analysis versus what the options market was telling me.
Yeah, Scotty B and Rain Man.
Hence,
I got all kinds of new names on this. 2 more stocks, and then I want to get your take generally on earnings. Disney. I just want to say Disney Abu Dhabi. That's really the only reason I'm bringing it up. I don't have any.
Are you going to watch Aladdin in Abu Dhabi?
I just want to say Disney Abu Dhabi. Like, that's all I want to say. Right now, it's the theme park in Abu Dhabi. Big news on that. Obviously, earnings reaction was stellar. Disney back as a trading stock, or is it just dead as a trading stock for most traders?
No, you're gonna have to prove out a lot more than a little bit of a gap up here.
I just wanted to say Disney.
First of all, congratulations to Disney. Disney had a wonderful report here this week. I don't have anything negative to say about Disney here after this report. Disney had a wonderful report that came in with a 23% beat against EPS. Revenue was up 7% year over year. They increased forward-looking guidance. That's a hat trick, and they gapped up on the hat trick. That was one of the best reports I've seen out of Disney in totality, really since Iger came back. And so I felt like it was really, really, really good report out of Disney. In answering your question, Mark, my answer to your question is technically you just got a lot of overhead. And so, when you gap up into that overhead, like, you're going to want to see development here. And so you want to see development at 105. 105 is a level that you could absolutely track. The problem is at 110, you got the 200 grandma mom moving average that is staring you down the barrel. And so I just think you got short porch type stuff. And when you're talking about trading, man, give me a bunch of those growth stocks on the trading side of the equation right now over Disney. If it develops right, you could see something, but Disney had a wonderful report. Investors are happy. I don't see this as a trading stock right now.
Then last stock I want to talk about is Boeing. It's probably my favorite play on the whole board right now. Not complicated analysis was announced in the UK trade deal when India, which is probably one of the next major trading partners to make a deal with the United States. Boeing will be mentioned in that deal as well. Early signs are, additional planes. Boeing seems to be.
UK just bought more planes.
trade war winner. You have members of the administration like Lutwick coming out basically saying we're going to take care of Boeing. Like when I have, and this is very simple, it's not complicated. When I have institutional powers say that they're going to support something, makes me want to support it too. It's not complicated. That type of simple analysis tends to work out really, really well. Boeing seems to be, a clear winner, and it got a beautiful technical breakout as well.
It's Boeing. What do you want me to say? I don't have a positive opinion of this company at all.
Yeah, but but nothing.
No, I said they were a winner. I said they were a winner out of the trade deal. They got 32 planes getting ordered out of the trade deal.
Emotions run deep.
What do you want me to say? I don't like this company. I don't like the management of this company. I don't like. You have a positive opinion of them. That's great. That's great. Like I don't disagree with your opinion. Like I think your analysis is right on. I think they are a clear trade winner, and I think the Trump administration has targeted them. So I have nothing to negative to say about your analysis. Anything I will say about this company is not positive, though.
Absolutely. I have I'm looking up Rain Man quotes because it's been so often to try to make fun of you on one of these while I do this. Give me your take on overall earnings season.
Getting better. This was a decent week. Blended growth's been a good number, especially after the Mag 7 reported. Blended growth improved. It's going to be a good number. I got concern on guidance. I got concern on the veracity of EPS beats. I'd give it an overall C- so far. There's been too many companies to remove guidance to give it anything above a C.
And C's get degrees if you can get some big, beautiful Bill Catalyst.
C's get degrees, not in earnings.
On that, just want to take a quick look in our final segment at the week ahead, and then we're going to wrap up the podcast. Matt, so got this weekend, right? We're going to wake up Monday morning. We're going to have some kind of headline on how trade negotiations went in Switzerland between Scotty B and the Chinese. That is going to be that. Obviously, we're going to have the promise. Maybe we get another deal, all of that. But on the known events, it's inflationary week, right? Spread out, normally back to back. They keep juggling these, Matt. CPI one day, sometimes back to back, but we got CPI on Tuesday. We got PPI. Both have, and I found this very interesting, a little more elevated on the forecast than the previous number, right? And Forex Factory usually gives you a pretty good gauge of, well, I mean, there's a reason we use them, right? I mean, they give you a good gauge of what the consensus is out there. 0.3 on the month over month on CPI and PPI. That I was not expecting to see that high a number on the month to month, year over year, 2.4. What are your thoughts next week on, on inflationary week? Does it have the same impact? Is it going to take a back seat? Could it provide a catalyst? What are some?
Of course, CPI and PPI could provide a catalyst. Inflation, the central bank is putting inflation on the scale. Obviously, the Trump administration through the trade war is as well. Consumer inflationary expectations have exploded over the course of the last 2 months. Consumers are chiefly concerned on the inflationary side right now. My conversation on inflation is more about the central bank and monetary policy, but as a consumer, I certainly understand that concern. And so absolutely, if you see a miss here this week and you coming in at 0.4, there's no rate cut happening in June. Like, it's just not happening. It'll come off the board.
Can it have a positive impact, though?
Of course it can. We just had a conversation on Buy the Rumor, Sell the News. Of course they can. Expectations 0.3. If it comes in at 0.2, market's going to be happy.
Give us some final thoughts to wrap us up today, Matt.
Hopefully you guys enjoyed the podcast here today. And if you did, hit that like and share as always. And if you're ready to become a pro member of Tackle Trading and check out all the goodies that the pro members enjoy, such as the Traders Lounge, the new Discord Hangout, Charts and Chill. We do it every day on Tackle Trading's Discord for the pro members. The newsletter, the Traders Report that we put out every single weekend, the nightly educational events, the mastermind groups, you name it. We put the application and education together at Tackle Trading for our community. Go over there to tackletrain.com, hit that free trial and sign up today to become a pro member of Tackle Trading. And with that said, Mark, send us out.
Now, listen, everyone have a fantastic week. We got a great community. We do a good job in education. We got to do a good job in analysis and providing guidance. And we help our traders make a couple bucks along the way as well. Fantastic community. Come join us. It's a great time. Come be part of this family. But have a great week, everyone.